Hi guys, welcome to this lesson on creating your unique trading plan. So in this lesson, I'm going to share with you what are the parameters, right, to determine your profitability, right, your expected profits that you expect to make per week, per month, per quarter, or per year in your trading, or even you can use this as a tool to actually to analyze your investment gains if you have a couple of positions. Okay, so let's move on to understanding, right, some of the parameters in this trading plan that you're going to use. Okay, so there are some factors that you're going to use. Okay, take note that you're going to use this Excel sheet under we call it the SPY money management Excel sheet over here. So I'm going to explain to you over here in the slides first what is the sum of the parameters that's involved that will affect or improve your profitability. Okay, so the first one is of course the amount of money that you going to enter into the trade, or we call it the risk amount, and this is the amount that you can actually increase or decrease based on your temperament. Okay, so what is the size that you are advised to do? It should be the size that you're comfortable losing 20 or 30 times in a row, right? If you're someone who doesn't mind risking, let's say $100 and per trade, and you're prepared for 20 times, 20 or 30 times drawdown, which is 2K or 3K in a row, two or $3,000 drawdown, right? You are definitely okay to do this size. However, if you let's say you do a per trade, the size is let's say $2,000, let's say $2,000, and you find that after you enter the trade, right, your heart is pumping too much, and your hand becomes sweaty, and you can't sleep at night. You keep checking your phone, your trading view, the CNBC for news, any news affect you. So this will not be your size, right? This $2,000 will not be your size. So what should you do is, if is you're starting at $2,000 and you feel very uncomfortable, my advice is to reduce it by half. And if 2K cannot, go down to $1,000. If $1,000 you still feel uncomfortable, go divide by 2 again to 500, to 250, and to 200, and to 100, and to $50 at the minimum. What if you cannot risk per trade $50? You still feel very jittery, a lot of anxiety, and so on. So if $50 cannot, right, my advice is that's actually the lowest risk amount for a trader. Okay, and if not, you anything lower than $50 per trade, you're advised to do paper trading first. Okay, do paper trading first. There's no there's actually no right and wrong to do paper trading. Okay, there's both right and wrong actually. Like if you do paper trading, of course you don't feel the, you don't psychology, you don't feel that there's real money on in the game. There's no skin in the game, so you can't really train your psychology, right, to handle wins and loss. Okay, that's why when people trade paper trade, their performance is very different when they go on to live trading. Okay, however, if your size is really too low, you're advised to really go in to do paper trading first, and until you're ready, you can come back and do $50 per trade. Because in my opinion, anything less than $50 is not $50, anything less than $50 per trade is not cost efficient, because your commission, let's say you're trading stocks in Think or Swim or even interactive brokers, the commission is somewhere between $1 to $2 to up to $5. Okay, so you want it to be efficient as well. Okay, so do think through the risk amount. Do not compare yourself to a person on the left and right. The amount must be suitable for you. Okay, you're not trading for someone else, you're trading for yourself, right? You must be the one, you're going to be the one who click the button, right? You need to be comfortable with the size, no matter how small, right? Understand that eventually you can grow your account. I started with a small account as well, and I eventually grew my account once I get more and more comfortable, right? Okay, and the second parameter is called the win rate. Okay, even though it's uncontrollable, by default, based on a methodology, right, you can put in as an average of 50%, right? If you are very proficient, you can go up to 60, 70, or even 80% win rate. Okay, but by default, later on in the Excel sheet, you're just going to key in as a 50% win rate, right, to be conservative. And in our methodology, we are gaining for at least a 1 is to 1.5 or 2 or 2.5 risk reward. So by default, we're going to put in as a 1 is to 2 risk reward. Okay, that means you're risking, let's say, $1 to make $2, $100 to make $200. Okay, So the number of round trips for the selected period. So it depends on your basically your style of trading. If you are doing short-term trading, right? Of course, your round trips means your buy and sell, right? Or your buy and sell, we call it the round trips is definitely higher. If you are doing swing trading, your round trips will definitely be lower. Okay. All right. So you can read this later on your own, right? All these materials here. I will just move on to right. I'll just move on straight to the Excel sheet to guide you along. Okay, you can just focus on the Excel sheet over here. Okay, so you can see in the Excel sheet over here, the portfolio size here, right, is going to be ask yourself. Okay, the question I'm asking myself here is going to be a question is going to ask yourself when you design your trading plan. Okay, so portfolio size is your account size that you want to fund in to do your trading. Whether there's margin or not, this is basically the amount that you're going to put into account. So let's say even if you put in a 10K account, even though the broker gives you a leverage of 1:2, you're still going to key in here as $10,000 because this is the real money that you put into the account that you are risking. Okay, so let's say I start off with a portfolio size of $10,000. Okay, and you're advised to risk, let's say around 1% per trade, which is if you have a $10,000 account, right, 1% is about $100. My advice is not to go beyond 2%, especially if you are a new trader. Of course, so if 2% will be $200, conservatively you should be risking, let's say, 1% per trade. And when you key in this 1%, this $100, so you can only change the parameter in green here. Okay, so you can change those parameter here in green. So when you key in $100, make sure that this is actually 1 to 2% of the original portfolio size or your account size. Okay, and when you key in the $100, right, which is 1% over here, you must ask yourself this question: whether you are able to mentally and psychologically handle risking this $100 per trade. Okay, let's say for 20 or 30 times. And I mentioned by default the risk reward you're keen as 1:2 over here, and the round trips per day again depend on your style of trading. Okay, let's say you are a swing trader, right? Swing trader, you typically, if you're looking at the 1 year 2 days chart, you typically have around 15 trades per month, right? You have around swing trader for 1 year 2 days chart, you have around 15 trades per month. So for 15 trades a month, you have to change this to let's say 0.75. Okay, you can only change the one in green over here. So when you key in at 0.75, so you can see that in a month there's about 15 trades, in a quarter 45 trades, in a year 180 trades. So this is basically when you key in 0.75 is basically an average number of trades you do per day, right? On a week is about 3 to 4 trades on a 1 year 2 days swing trading chart. If you're doing weekly charts, right? Weekly chart based on experience, you do have around 4 to 5 trades per month. So you can key in here even lower, like 0.2, for example, 4 trades per month. So 1 year you have about 48 trades only if you are doing swing trading on the weekly charts. Okay, there's no right and wrong. It's a matter of size, right? How much size and your own lifestyle. Okay. So let's say over here you decide to do the 1 year 2 days chart using 0.75, average about 15 trades, round trades per month, a win rate of 50%, right? So you win or lose half the time. So over here will be the expected win and loss per given for the different periods, expected P&L. Let's say we look at a monthly basis, right? If you have this kind of configuration, I'll be looking at making $750 per month. That means I'll have 15 trades, I'll win about half, 7 to 8 trades, and lose 7 to 8 trades. Overall, by risking $100 per trade, I expect to make $750 when I follow my trading plan. Understand? Okay, so let's say for example today you decide, right, you say that okay, $750 is too low. Okay, you want to increase double this, right? 7,500 to, let's say, $1,500. What can you do, right? Obviously, you can of course increase the size, right? You can increase this to $200, and this will become $1,000, 500. You basically a multiple of 2. However, if you determine that you want to increase the size, right, you also must make sure that psychologically, right, and mentally you can handle the increase of size, right? A lot of people say they want to trade a big account, but big account comes with a bigger size, right? When it comes bigger size comes with a kind of the emotional burden and your mental the toughness to handle the kind of positions when it fluctuate. So you need to be able to handle that as well. So let's say you cannot handle the $200 per trade, you find that it's very mentally you're not ready or psychology not ready. You can keep to the $100. Keep to $100. What else can you do to increase your size? Let's say risk reward is constant. That's right, you can increase your round trades per day. Then probably you're going to do more trades. 1.5. So maybe on the 1 year 2 days chart, you're going to do the double the amount of positions that you already have in order to increase your round trips. So without increasing your risk per trade, you actually still able to increase your monthly returns. Obviously, you will, of course, this will means that you're going to put in more screen time to screen for the setup and open double the positions initially. Okay, so these are some of the ways, right, you can actually manage your to do your trading plan. Okay, so think through all these parameter, and create your trading plan so that this became the basis for you to trade in the long term. And I can reassure you that a lot of times traders who burst their account is because they didn't follow their trading plan, right? Probably they enter a first few trades and touch wood is a loss, they tend to decrease their size, right? They're not following the plan, they decrease their size or they overtrade and increase a bigger size aiming to make it back, right? The revenge trading, right? And I basically make all the mistakes that you can imagine in trading before, so I understand that nothing good come out of it. Okay, the one that enable traders to make back all the losses and to be profitable in the long run is to maintain the right psychology, the right risk and management tactics, right? Controlling of risk. There will be down quarters, there will be down months, and the top trader will be the one who is mentally prepared and able to bounce back and be cool-headed in the face of win and loss. Okay, so my advice, please follow the trading plan, go through the parameters. All right. So you can actually go and look through these examples over here. It's very interesting, right? So play around with the parameters. Even here, right, you can play around with the parameters. Let's say, for example, your win rate is only 40%, right? You can actually simulate over here. You realize that even if your win rate is 40%, that means out of 10 trades, you're going to lose 6 and win 4, you will still be profitable for the month. Of course, here is excluding commissions, because I believe we'll be all be trading, you guys will be trading through Think or Swim or Interactive Brokers. The commission will usually adds up to less than 5 to 10%, 5%, less than 5% actually. Okay, so it's not a material impact on your P&L. If you make money, the commission is negligible. Okay, so you can just take this off the face value here first, right? You only start to lose money on a 1:2 risk reward, I think, when your win rate is less than, let's say, 33% and below, right? Then you start to lose. Maybe out of 10 trades, you're going to lose 7. You will be around break even. Okay, so it gives you a kind of mental fortitude to understand that even if you lose 7 times, you're not going to lose a lot of money. You'll still be riding through the tough patches. But once right, your winning streak comes, which will come for all traders, right? Let's say you aim to hit 60% or even 70%, right, on very good months or quarters, you can essentially make it back very fast. Okay, so this is the kind of mental models that all professional traders have. Okay, so think through your size. Is take it as a game. It's very fun to play around. I used to look at this like when I'm doing my own trading. These are the parameters that I use even for investment, right? Let's say investment. You're investing in 4 stocks a year, right? For example, let's say I'm just going to put uh let's say 0.02. You can only change the parameter. So let's say you invest 5 stocks a year. Let's say is 5 stocks a year, which is around 4.8 stocks, right? So let's say you're doing a bigger account, let's say $100,000, you're risking, let's say you want to go big at 10%, right, per trade. Your win rate is just 50%, right? You can still expect to make $24,000, 24% per year. Okay, take note, this is a 10% risk, so this is definitely beyond what I actually advocate to you as a very starting trader. But I'm just going to share with you, this is probably what some investors do, right? When they invest in a stock, they probably have 10 positions. Of course, they will be risking more than the initial 1 or 2%, right? If you have only a few stocks and but a bigger portfolio. Okay, so again, this 10% is not recommended for new traders, right? You can keep it even at a uh, lower amount if you want, right? My idea here is just basically to let you know that you can play around with the parameters here. Okay, so hope that this lesson help you to design your trading plan, right? For those of you with any questions, you can always post them to me and I'm glad to help you. Okay, so I'll see you guys in the next lesson.